Next, we're going to talk about affordability and specifically affordability of real estate in Canada. It is by many accounts, it's at an all-time low, meaning people can't afford homes, people can't afford real estate. Defaults are up, Patrick. We're seeing defaults are up. I know you put out an article that Toronto Star had a recent report on defaults. I haven't really got into that one yet, so I'll let you speak to that. But I will tell you this, and this, I got an interesting chart here I want to show, which is affordability is really has not only, even though the price of real estate has gone down, and I'll give some stats in a second, affordability has not improved at all. And here's the stats. So in the last year, from March 2022, which was the tip top of the market, to March 2023, which is where we are today, the average Canadian price, which we don't like averages, but for this point it works, which is the average price in Canada went from 796 to 612, 796 grand, and on average down to 612. Now that is not, just so everybody knows, Patrick and I hate averages, and that's because some properties went down much more than that, and some properties didn't go down at all. Some properties actually went up in value, but on average, which for this point, it has gone down $183,000 in the last year. But affordability, Patrick, the average mortgage payment with 20% down has went from $2,850 to $2,980, which is up $130. So even though the price of real estate is coming down, the actual affordability is going nowhere. It's gotten worse, which there's going to be hell to pay for this. It ain't going to be good.
This goes back to, the whole conversation around, interest rates, but also interest rates, inflation, the fact that people are not able to, and, there's one conversation that's had a lot, which is that even those families who could afford a mortgage payment can't come up with a down payment that's based on the down payment that they need to actually buy those properties. So these are things that are going to continue to happen. Now, in the case of the cost of living and the cost of borrowing combined, people have less disposable income, and that's the problems that we're facing right now. And the good news is that Tiff Macklem has paused on the rates, and I don't see a rate increase coming in the next one either, in his next announcement. But that's the challenge that we're facing right now, is the affordability will continue to be an issue. As investors, it speaks to the opportunity because we know that there's demand on the rental side, and the people who are renting is changing. So your demographic of renters is changing as well. It gives you a broader scope of demographic to actually set up and be specific in terms of who you're marketing to and who you want your demographic to be. And that speaks to the property type and the location that you actually invest in, JG.
We got this interesting chart I want to show about this debt to service ratio, which is interesting because disposable income required to meet debt obligations is almost 15 to 1 right now, whereas the interest payments are 8 to 1. So you need 8 to 1 just to pay off the interest because interest has gone up so much. Interesting chart by Acorn. And again, just points to the kind of difficulty and affordability until that supply moves. Oh, and I want to talk about supply. I'm not adding a sticky note, but maybe we'll talk about it now because it is time to talk about it. Patrick, we've been monitoring the spring market so far, and looks like JG's prediction of Sleepy 23 is coming to light. It is happening. It's a boring market. It's sleepy. There's absolutely no action happening out there for the average person. For some creative investors, we'll speak to that after, but for some creative investors, there's some good deals out there. But all in all, pretty sleepy because there's no supply. There's nothing on the market to move. As a result, affordability is going nowhere in Canada.
When I talk to realtors right across the country, when they do see deals come on board, they're actually seeing that are priced right. They're seeing multiple offers and they're gone in a heartbeat. So anybody who is putting property on the market that isn't, pricing it right, they're trying to come in too high, it's pretty quiet. But the big point to your point, of course, is that there are no listings coming on. People don't want to necessarily sell. And there's a lot of reasons for that. Number one is that some of them are already into mortgages that are still, sub 2 or 3%. So why do they want to give that mortgage up to go into a higher mortgage if they can't port that mortgage, or if it doesn't work to go to the bank and get that same mortgage carried over? But whatever they upgrade to, of course, they're going to pay a higher interest rate on. So these are all some of the issues that are behind the scenes in terms of why real estate isn't coming on. I know that realtors are hoping that now that spring has arrived, that they're going to see an uptick. We'll see what's going to happen. I mean, I think that there's a couple things, JG, around the sleepiness, to your point, is that it's just a reoccurring conversation. If you watch, some of the social media feeds and you're really listening to realtors that are out there talking about it, it's really the same conversation over and over and over again. Not enough listings, not enough sellers. The interest rates are still too high. Cost of living is too high. People don't have the money. They don't have the down payment. So these are just kind of the ongoing conversations. I don't know what has to shift, but here's the thing that, to your point, is that there is some great opportunities for investors, but you gotta dig, you gotta look. It's not like they're just laying on the street. We've said that many, many times, is that you've got to dig and you've got to get creative with your strategies, because you are in fact going to be able to help a lot of people solve problems.
Yeah, interesting that you mentioned that, Patrick, because one of the things we saw in this, and this is a Toronto Star article where GTA is seeing a surge in forced sale listings, and this is where, and we're starting to see this. We talked about this months ago, where this was going to be the next phase, and creative opportunities were going to show up. So we're going to see some defaults. But in Canada, if you're an investor and if you're waiting for a huge surge in bankruptcies, or anything like that, the Canadian system is not like the U.S. system, where you have a lot of defaults and you have a lot of, banks have already done this, Patrick. They've re-amortized a lot of mortgages. They've pushed off what couldn't be amortized in 25 years. They're going to 30 years. What can't be done in 30 years, they're going to 35. They're just continually going to stretch amortization until it can be wrapped up into something that makes sense for the seller. Banks don't want to own this stuff. The banks don't want to own your property. That's the last thing they want. They want you in that property. They want you making your mortgage payment. And the bottom line is, because Canada right now has a very strong labor market, we are not going to see, and we're not expecting any more big drops in pricing. We think the big drop happened in the last, the first part of last year. And even the back half of this year, we've seen very stable pricing, Patrick, and that's because of our strong labor market. What's stopping the moves is this high interest rate. Like you said, people don't want to move. People don't want to get out of a good mortgage and a good property. Yes, they might be able to buy the next property for less, but the cost of interest is so much higher. It's not worth it. They'd be crazy to do that.
Well, they are, and so there's a couple of things around all of this. To your point about the banks are accommodating borrowers for mortgages to the degree that they can, and extending amortizations. They're actually, because of the interest rates, people are actually extending. They're only making interest payments on a traditional mortgage. So it's still a mortgage, but it's a line of credit, and they're actually not buying down principal, and they've extended that amortization. So banks are, in fact, putting themselves at a little bit of risk there, increased risk, but they're also making money while they're doing it. I think the other side of that equation is that some people are going to wake up in 2, 3, 5 years from now and realize that they've been living in a house that they've got no buy down in terms of mortgage, depending on what happens with rates, of course. So there's risk on both sides. And so as much as homeowners don't want to default, or they don't want to walk away, and I totally understand and get that, their underlying kind of, I don't want to even call it risk, but the underlying part of that equation is that they're not gaining anything either, which is, of course, what many homeowners want, is they want to have that equity gain, and they do that through mortgage buy down often if prices don't go up. So these are all things that are happening in behind the scenes that banks don't, to your point, banks don't want property. They don't want your real estate, so they're going to do what they can. As long as people are working, here's what we know about Canadians. Traditionally, historically, as long as Canadians are working, they stick handle, they get things figured out, they pay their bills, especially their mortgage.
Tell you this though, Patrick, before I crumple the sticky note, what this does is this only helps the rental market, because people that were out there thinking about buying are saying, listen, why would I buy something, put out all that capital, the 20% I need to go buy it, and then after 5 years, I won't even own the doorknob. Why the heck would I do that? I'll just rent a beautiful place. And what we're seeing is, again, more pressure on the rental market. And even though rents, I can tell you in my particular market, they've flattened out for sure. They've even come, some categories have come down a little bit, but let's be very clear. Their rents are still fantastic. They're still phenomenal. And unless you bought at the tip top of the market, then you might be in trouble. But if you've owned real estate for any amount of time, the rents are still very, very good. And what we're seeing is a huge push on rents. We're seeing a great class of renters, a phenomenal class of renters coming in, which doesn't help the lower end of the rental market. But that's a topic for another day, Patrick.
Yeah, and just as we finish this particular topic up, JG, I just want to shine a light on a couple things, and that is, folks, we talked about Barry Maguire, his rapid cash program. We brought Barry back in because we know the opportunities that are going to be there for those who take the time to gain that little extra education and then invest in a way that supports and helps solve other people's problems. This is not new. It's historically, this works. That's why we did it. We saw this coming. And, for those of you who still want to invest in real estate, I know the deals aren't falling, they're not falling off the truck. You have to go look for them, and you have to get creative. But if you're in there and you're willing to get creative and solve other people's problems, that's where that extended education is going to support you. And I really suggest that investors get into it.
I like it, Patrick. Creative buying as well as affordability covered. That was a good shot. Next, this is your segment of the show, Patrick. Tell us about Alberta and inflation.
Alberta rocks, and their inflation is far lower than anywhere.
Why am I not surprised you would lead
why
with
do
Alberta?
I need to add any more? So we had fun. I was in Calgary.
I got to get you a shirt. Mr. Alberta. Hi, I'm Mr.
Totally.
Alberta.
Listen, I just follow the facts. It's the facts and the data, JG. It's not, don't take it personally. I love Ontario. It's just the facts and the data. And that says, guess what? Alberta's coming back. I saw a guy that tweeted yesterday going, oh yeah, it's like rinse and repeat. Move to Alberta, get a job, buy a house, get laid off, lose your house. And I just about wanted to come right across, these kind of statements. And he happened to have a lot of followers. What's that?
Is he wrong?
He's 100% wrong. Here's the fundamental around all of this. So first and foremost, that is an old story. These are totally different conditions. We've never had this happening in the world before. So people want to keep going back to historical norms. Well, this is what's happened in the past.
Well, that's what's happened in the past.
Well, we've never had 1 million people in a year move into the country. We've never had the global economic conditions that we're facing today. So does Alberta stand to do extremely well? Yeah, they'd actually do better if they wouldn't have shut down pipelines. That's a different story. But Alberta, through the leadership that they currently have, guess what? They've expanded. They've got a whole different industries that they're opening up. They're being very progressive, and we're going to talk about it, even in terms of what they're experimenting with in terms of housing, taking office buildings and or commercial units, if you will, and converting them to residential. Now, they're the first, I think they're leaders right now in Canada to do that. So Alberta is being very progressive. The cost of living, I've hammered it, I don't know how many times, cost of living, cost of housing, no provincial sales tax, wide open spaces. Guess what? Jobs that pay more. That province will continue to do well. Now, if I tell you what, if Alberta's at risk, this whole country's at risk. So if Alberta goes down, we're all going down for whatever reason. But I'm saying right now, based on what we know, Alberta will continue to be strong. That's it. It's that simple.
For a while, this episode was becoming a sleepy episode, but now the energy you've pumped into it, because when I attack Alberta, you just come alive. I love it. I love it, big guy.
Well, I just go with the facts. The point is this, is that there isn't a province in this country that I don't love, but when I'm here to support investors, what I'm saying is you got to look at the data, you got to look at the facts. And JG, we would be remiss not to shine a light on something that we don't say often enough is, there's an old kind of tagline or whatever, is it'll be different this time. Listen, I get that tagline, but it's not about being different. It's about looking at the conditions and saying, given the conditions, what could change, what might change, what will change. And the conditions are significantly different than before. We didn't shut down. We didn't recover from a pandemic. We didn't shut down like a global economy. We didn't have supply chain disruptions. We didn't have a market flooded with cash. I mean, these are all different conditions. So if you're looking at historical, and this is some of the problems that I see happening even in conversations with in the realtor space, for example, they're talking about historical. Well, this is what it was in 2008. This is what it was in 2000. I go, quite frankly, I don't care. These are maybe an indicator, but it's a totally different scenario than we've ever had before. And I think that's how, as investors, we have to look at the market.
So now that your Alberta rant is over, let me help. Let me give some substance to this here, Patrick. Which is what's a couple interesting facts happening in Alberta, which is the inflation. Number one, the inflation across the country continues to come down, which is why they paused the interest rates. Patrick is hoping, you're hoping, Patrick, and I agree that they that they hold again and they don't increase rates next cycle. And I think that's next month, right, Patrick? It's in April. The
Yeah,
Bank of Canada meets
I think
again,
it's April. Yeah.
so we'll see. We'll see what happens. What's interesting is that Alberta's inflation is coming down faster than the rest of the provinces. We've got this cool chart right here with the blue bars. You can see Alberta inflation is 3.6%, which is still compounding more than the Bank of Canada would like. Compare that to BC at 6.2%. That's almost double, Patrick. BC, good old bring cash. Prices always going up in BC. So that's fascinating. And also compared to Canada as a whole, we have this cool chart by the ATB where, again, Alberta coming down faster than the rest of the country. Very, very interesting stuff happening. And Patrick, even though I bust your chops about Alberta, listen, I listen very closely. I've been investing heavily in Alberta, and I love it. It's doing very, very well for me. 70.1% ROI in the last 14 months for one of my investments. So thank you for that, Patrick. I owe that all to you, Mr. Alberta.
Hey, well, listen, good. I'm glad you're making money, and that's awesome. You could maybe share some with me when you got a minute. But here's the thing around all of this that we have to look at. So, Mr. Alberta, I get it, but understand something is what we're seeing is a lot of interprovincial migration and immigration coming into the province. And so keep in mind one thing, in that as that comes into the province, people are spending money. There is the risk of that inflation coming up again. Certainly, we know as investors that will drive house prices and that will drive rents. So that's on the good news from an investment point of view. Alberta has a great future. And you look at what's happening in Calgary, Edmonton, Lethbridge, like some of the surrounding areas. I think Alberta just stands to do extremely well. But always, we got to monitor what's happening. And here's where all bets go off. And I know this is political. I'm going to say it anyways. If the NDP gets in, all bets are off, because that'll change the game, perhaps.
Yeah. Didn't you guys make that mistake only a couple of years ago?
Well, it was a while back, and there's not you guys. There were some people of the province thought that NDP would be a better government, and I just don't agree. So that's what I got.
I love it. Now, you made a mention, Patrick, of a couple things. Number one, you talked about how some commercial spaces are being converted into residential. We knew when COVID hit, first thing we talked about, Patrick, was how some commercial space, because of the work from home movement, we'd have a kind of a pretty huge spike in vacancy in commercial space. We then went ahead and saw that spike, office space increase. And now we're seeing some of that space being repositioned in the marketplace as residential. Actually, Calgary, I think, is kind of one of the leaders in this space. And even though occupancy of office space is starting to rise up again, it's still not where it was pre-COVID. We got a cool chart on that where pre-COVID occupancy was at 55% midweek, and it's currently still at 43%. So 10% down from where it was. Interesting how that market is coming back, but slower than anticipated. And will it ever recover? We expect no. It will never probably go back to where it was, Patrick. At least that's what I think.
Yeah, I saw some notes. RBC's putting some pressure on employees to start coming back to work part-time. They're saying they can't, by not being together, they're not being as competitive in that market. I understand that. So I think we'll see some pressure in these bigger corporations on employees to get back into the office. And I'm not here to debate whether that's smart or not. I just think they're going to be kind of facing some headwinds with people in general that just are not going to come back to work in that way. So there's some inherent risk in making and forcing the river in that regard. I think on the other side, though, back to the Calgary component of it, this is, again, talking about the innovation. We often talk about, JG, about the economic development. When you're looking at a city to invest in, you have to consider the economic development. Are they progressive? Are they looking into the future? And, when we talked about Hamilton and Barrie and all the areas in Southern Ontario that we used to shine, well, we still do, but we shine a light on, it was because they were being so progressive. Here in BC, it was Surrey was being the progressive, and then Abbotsford. So when we look at economic development, when we look at Calgary and what they're doing, so the city of Calgary actually was part of the investment with the developer on these projects that they're working on. Now, it seems so simple, right? Well, just take an office building or take this particular commercial space and turn it into residential. It's not that easy. It's a huge project because of how everything from plumbing to electrical they have to redo the whole thing, because within the scope of what works for residential, they have to look at reconstructing all of it to make it work. So these are bigger projects than it would seem. It's not like, oh, let's just turn that office into somebody's apartment. It's not that simple, although it would be cool if it was. It's not.
And even the construction, Patrick, let's just say the construction could be handled relatively easy, which often the construction is not the part that holds people up. It's the zoning. You got to come back to the administration of that building. If it's zoned for an office space and has no components of residential, you cannot put a dwelling in an office space. It's illegal, and they can shut it down. So the city actually has to push through residential applications to that zoning building. And then guess what? This is where the good old NIMBYism kicks in. And then, all the Karens come out. I probably shouldn't have said that. That's definitely offside, but that's okay. It's out there now. But NIMBYism becomes a problem. And that's where projects get stuck. It's actually, the construction's relatively easy to handle compared to the other stuff, because we can run some pipe. We can do things on the construction world to make it happen. But that other stuff, the stuff that happens at city council, the stuff that happens behind closed doors that we have no control over, that's the more difficult things.
Yes, you said it all right there. But the good news is around it all. Just want to say the good news. Go. Last thing. Go.
Just go.
You go.
You say it.
You go. No, I was just going to say, I was going to wrap it up and just saying the good news around all of that is that Calgary's being very progressive in what they're doing. And I think that's going to open up some opportunities and maybe lead the way for places like that, in Toronto, for example, to maybe shift some of their view of the world. Maybe.
Let me just back up one more piece of your rant there, Mr. Alberta, which is we got this cool chart about how Canada's hit a population milestone where actually yearly percentage change in population is up 2.7%, which is the most we've ever seen. If you look at this chart, it's almost off the chart, if you will. And a lot of those people are flowing into Alberta because of the cost of living and because of affordability. That's what you were saying too, Patrick. I like to add context to your rants because they get all very politically charged. I'm just adding some depth to them, if you will.
Well, I'll have you know that I was just in Calgary and we put together a live in-person event with one of our trusted partners. And many, of course, were from Alberta, investing in Alberta. And it was really, really simple to explain to them. It didn't sound like a rant at all to the locals that were in Calgary that night and from across the province, because we were just talking about the economic facts and the economic data. Rant aside, it was very straightforward.
Alberta and inflation covered.
If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.
If you want to see more stuff like this, click here. If you want to see the entire show, click there.